What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my account. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos, guys. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp. I do not invest money for my subscribers under no circumstances. So please be careful. Don't get yourself scammed. If you want 6 free stocks, Webull is going to give you 6 free stocks. When you open up a Webull brokerage account, put at least 1 penny in that account. They're going to give you 6 free stocks valued all the way up to $12,600. So after the video, I want you to go down to the description box of the video. Click on that Webull link, open up your new account today, go get that free stock, go get that free money. The Federal Reserve has the power to throw our economy into a deep recession. And I certainly don't want that to happen, and I know a lot of you guys don't want that to happen. But here's what the Federal Reserve is dealing with. And they need to know in order to decide if they're going to increase short-term interest rates at their meeting at the end of July. GDP and CPI are 2 important metrics. And let me give you my simple version of what I think those 2 things are. Now, guys, I'm no expert. I don't need you down in the comment section telling me I don't know what I'm talking about. Listen, I'm a YouTuber. I make financial videos. I give you my opinion. If you don't like my opinion, go make your own YouTube video and then you can give your opinion. All right? Okay, let's move on. So let's go with GDP first, which is gross domestic product. GDP is used to estimate the size of the U.S. economy. And if you have 2 quarters of negative GDP, technically we're in a recession. Now, since 1947, we've had 11 recessions. So the GDP number for first quarter of 2022 was negative. The second quarter of 2022, which ended June 30th, will tell us if we've had 2 quarters of negative GDP. And if we have, then we're going to be technically in a recession, and that's an important thing to know. That's an important thing to know for our Federal Reserve at their meeting in the end of July. Now let's move on to the second important thing, which is CPI, which is the Consumer Price Index. That's used to track changes in the prices of our goods and services over time. For example, a loaf of bread in June of 2021, they will track the price of that to June 2022. And they will tell us, the CPI tells us if that loaf of bread went up in price. So the CPI numbers are important as well, guys, along with the GDP numbers. Now, most people believe the Fed will increase short-term interest rates by 75 basis points, but that may not be necessary because, from everything I've read, there are a lot of financial analysts and economists out there that already believe our economy is softening, right? There are some economic metrics that you can look at to kind of determine that. So is it necessary for a 75 basis point increase at the next Fed meeting of short-term interest rates? That's the question that the Federal Reserve will have to handle and deal with. Because if they stay hawkish and they hit us with a 75 basis point increase in short-term interest rates, it really will throw our economy into a deep recession. And as investors, we're going to see shock waves go through the stock market. So we got to be careful moving forward and paying attention to certain things. We definitely want to pay attention to the GDP numbers. We definitely want to pay attention to the CPI numbers. Those two numbers should come out prior to the Federal Reserve meeting at the end of the month. And from there, you can kind of know what to expect. I think if the GDP numbers come out for the second quarter negative, we're in a recession. If the CPI numbers for June come out where inflation has decreased from the 8.6% in May, if it has decreased, then that's good news, because that tells us inflation has already peaked. That tells the Federal Reserve it's already peaked, and they may not have to be as hawkish on increasing interest rates to the tune of 75 basis points. Maybe they increase it by 25 basis points. Because again, we're not out of the woods, because inflation is still high. Inflation needs to be between 2 and 2.5%, guys. That's where we want inflation, and we're nowhere near that. So they're still going to have to continue to raise interest rates. The question is, how fast or how aggressive do they need to raise them? And that's where that economic data that I talked about, GDP and CPI, come in. Because if those numbers support a lower increase in interest rates, that's good. That's good for us as investors, right? That means we're on the way to recovery. We're certainly nowhere near it, but we're on the way to recovery. We've hit the top of the peak, and we're on the way to recovery. So be careful of what you listen to. Again, guys, I'm just one guy giving his opinion. I'm no expert at this. I'm just like you. I'm a normal, regular guy who reads and tries to process information so that I can give myself a really good chance to make smart financial decisions. That's all I'm doing, guys. I'm not telling you what to do. I'm telling you to be prepared. I'm telling you to do your own research, and I'm telling you to have a game plan ready to go, whichever way this thing goes. If those rates go up 75 basis points, there's going to be a sell-off in our stock market. I'm telling you right now, that's going to happen. So be prepared. If the economic data supports a lower increase in interest rates by the Federal Reserve, be prepared for that too, because then we're going to probably have a run, right? We're going to probably have a bounce in the market, right? Because that's good news. Investors want to hear that this thing is peaked and we're on the road to recovery. That's what investors are looking to hear. And if they hear that, we're going to get a bounce in the stock market. If they do not hear that, you're going to have a sell-off. So in my opinion, just be prepared, guys. And always, no matter what, if we're trying to build wealth long term, we gotta be dollar cost averaging in every single week, every single month, whichever time period you want to do it. But you gotta be doing it consistently, right? We cannot be sitting on the sideline trying to time the bottom or is it time now? No, we should be dollar cost averaging in right now, buying our favorite companies, favorite ETFs, and our favorite cryptos, right? Whatever that is for you. For me, you already know I'm doing that. I'm buying my favorite companies. I'm buying my favorite ETFs, right? And I'm buying my favorite cryptos because I know at some point, long term, if I do that consistently enough, I'm going to build wealth, man. I'm going to build wealth. Drop me some comments down in the comment box and let me know what you think about what will happen with the short-term interest rates when the Federal Reserve meets at the end of July. It's going to be interesting, but I'm going to be prepared, and I hope you be prepared too. If you want those 6 free stocks from Webull, click on that link down in the description box. Open up your new account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income,
credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.